What's up, everyone, and welcome back to Explain the Charts. Today is November 18th, 2025, and we are taking a deep dive into Microsoft, ticker symbol Microsoft. There is a whirlwind of news surrounding the company right now that we need to unpack before hitting the charts. First, and most significantly, the Bill and Melinda Gates Foundation sold a massive 65% of its Microsoft holdings in the third quarter, amounting to about $8.8 billion. This divestment occurred at an average price of around $510 per share, a move that is certainly causing a stir in the market. Adding to the pressure, Microsoft is facing an antitrust investigation from the European Commission regarding its cloud services. Furthermore, Rothschild & Co. recently downgraded their rating on Microsoft, signaling a less optimistic outlook from the firm. These headlines create a complex backdrop of potential uncertainty for the stock. Now, let's pull up the daily chart to see how this news might be reflected in the price action over the long term. Looking at the bigger picture, we can see the 52-week low was established way back in April around $345. From that low, Microsoft went on an incredible rally, peaking with a massive gap up on July 31st, setting an all-time high of $555.45. However, notice that on that same day, the stock sold off aggressively to close at $533, leaving a huge wick on the candle, which is often a sign of a market top. That high has not been retested since, and the price has been in a general downtrend and consolidation phase for the last 3.5 months. It's interesting to note that the Gates Foundation's sale occurred during this period of weakness following the peak, which could have contributed to the selling pressure. We can clearly see a strong support zone has formed between the psychological $500 level and down to about $495. This area was tested in early September and again in early November, holding up both times. On the flip side, a resistance zone has been established in the $525 to $530 range, which has capped multiple rally attempts since August. Let's zoom in on the daily chart, focusing on the price action since that July 31st peak. As you can see, after the sharp drop in early August, the price has been coiling in a wide range. Each bounce has been met with selling pressure, and each drop has found buyers, leading to this prolonged period of consolidation. The stock is currently trading around $507, caught between the key support at $495 and short-term resistance near $512. The recent drop from over $540 in late October down to current levels shows significant bearish momentum has entered the market again. This move coincided with much of the negative news breaking, suggesting the market is pricing in these new risks. Now, let's switch over to the 1-hour chart to get a better look at the short-term structure. Here we can see the sharp sell-off from above $540 at the end of October. The price found a bottom around $496 on November 6th and has since attempted a recovery. However, this recovery has been weak and has struggled to gain traction. We can see a clear area of resistance forming around the $511 to $512 level, which was the peak of the bounce last week. The price has been making a series of lower highs and lower lows on this time frame since that bounce, which is a short-term bearish signal. Currently, Microsoft is hovering just above the $507 mark, showing indecision among traders in the immediate term. For an even closer look, let's jump to the 15-minute chart for yesterday's and today's intraday action. Yesterday, on November 17th, the stock opened at $508.45 and traded in a range between roughly $505 and $512. The attempt to push above $512 was strongly rejected, reinforcing that level as immediate resistance. The price then drifted back down to close near where it opened, at $507.49. This tells us that neither bulls nor bears were in control yesterday, leading to more consolidation. So far today, the price action has been contained within yesterday's range, continuing this tight consolidation pattern. Traders are clearly waiting for a catalyst or a decisive break in either direction. All right, let's go back to the daily chart to recap and put everything together. The long-term trend since the April lows is still technically up, but the trend since the July all-time high is down. We are currently in a pivotal consolidation phase that will likely determine the next major leg for the stock. Let's summarize the key price levels to watch. Major, long-term resistance is at the all-time high of $555. The key resistance zone to overcome for bulls is between $525 and $530. Immediate short-term resistance is right at $512. On the downside, the most critical support level is the zone between $495 and $500. If that $495 level breaks, the next major support area doesn't come in until the $460 to $470 range, which was a prior peak in June. So, what are the potential scenarios? For the bullish case, we would need to see the price decisively break and hold above the $512 resistance level. This would signal that buyers are taking control and could open the door for a move to test the $525 to $530 zone. Positive news regarding their AI segment or a favorable resolution to the EU probe could fuel such a move. Given the current sentiment, I'd place the probability of this happening in the short term at around 40%. The bearish case, which seems more probable right now given the news, involves a breakdown below the critical $495 support. A daily close below this level would be a very strong bearish signal, suggesting a deeper correction towards the $460 area is likely. The heavy selling from the Gates Foundation and regulatory uncertainty strongly support this scenario. I'd assign this a 60% probability, especially if the broader market experiences weakness. Things to watch for: a spike in volume accompanying a break of these key levels, as that will give the move more validity. Also, keep a close eye on any new headlines related to the company's legal challenges or major insider transactions. Ultimately, the battle for control is happening right here, right now, between the $495 support and $512 resistance. Please remember, this is purely for educational purposes and is not financial advice. Always conduct your own thorough research and analysis before making any investment decisions. Thank you for joining us today at Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe to the channel, and ring that notification bell so you don't miss our next video.